Right now, the Bitcoin market is in the middle of an epic tug of war. I mean, on one side, you've got governments and huge corporations jumping in like never before. But on the other, economists are shouting from the rooftops about a recession that could send everything tumbling down. So today, we're going to break down this incredible clash and figure out what it all means for the future of Bitcoin.
And this really boils down to one massive question. What is Bitcoin right now? Is it about to become this major geopolitical tool, something nations hold in reserve? Or is it the canary in the coal mine, warning us all of an economic disaster just around the corner?
These two forces are pulling the market in completely opposite directions, and it's creating this really high-stakes environment. You have Washington, D.C. showing this incredible, almost unprecedented level of interest, while at the same time, all the big economic indicators are just flashing red. It's a total paradox, right? Let's get into it.
Okay, so first up, let's talk about the bull case. The argument here is pretty compelling. With so much institutional and political firepower getting behind Bitcoin, it might actually have a built-in safety net now, something that could shield it from a total market meltdown. And this leads to a new idea analysts are calling the political put. Now just think of it like an insurance policy. The theory is that with massive players, we're talking the US government, companies linked to Trump, getting so invested, they have a real incentive to keep the price from completely collapsing. It basically could create a floor that the price won't fall below. And this isn't just theory. Look at what's actually happening. You've got the White House seriously considering a Bitcoin strategic reserve. Trump media is pushing to launch its own crypto ETFs. And it's not just politics. Even companies like Steak and Shake are seeing sales go through the roof after they started accepting Bitcoin. This is real-world adoption, and it's happening on a huge scale.
All this growing confidence from the big players is leading to some unbelievably bold predictions. Take Rick Edelman, a huge name in finance. He's on record saying he expects Bitcoin to hit $500,000 by 2030. I mean, that is a massive vote of confidence from the bull camp.
But of course, not everyone is popping the champagne. Let's flip the coin and look at the other side, the bear case. And this argument is brutally simple. When a major recession finally hits, nothing is safe. Not even Bitcoin.
$10,000. Yeah, you heard that right. It might sound absolutely shocking, but that is a very real price target according to some serious analysts. It's the most extreme prediction we're seeing, and it just goes to show you how seriously the threat of a recession is being taken. And this gets us to that recession canary theory we talked about. The idea is that Bitcoin is so sensitive to the amount of cash or liquidity in the financial system that its price is like an early warning system. So when Bitcoin's price starts to slide, it could be the first sign that money is drying up everywhere and a much, much bigger crash is on its way for the whole economy. And look, this isn't just one analyst's bad dream. As you can see here, a whole lineup of major financial institutions is sounding the alarm. Ned Davis, Bloomberg, Standard Chartered, they're all putting out warnings, with some, as we said, predicting a fall all the way down to 10 grand. And this chart shows another really worrying sign. Money is now flowing out of those crypto ETFs we were all so excited about. It seems like after that initial burst of hype, investors are getting cold feet and pulling their cash out. Some are even calling it ETF fatigue. So what you have is this incredible divide. It's not just that the market is split. The experts themselves are looking at the exact same data and coming to completely opposite conclusions. It's a fascinating clash of ideas. This really lays out the two competing philosophies perfectly. Is Bitcoin the one true signal in a sea of crypto noise, a safe haven? Or is it just another risky tech asset that's destined to get hammered when the economy turns sour? That is the fundamental debate right now. And this quote from Lynn Alden just sums up the bull's maximalist view. She's basically arguing that a downturn is a good thing for Bitcoin. It's like a cleansing fire that burns away all the weaker, worthless coins and proves that Bitcoin is the only one with true lasting value. But then you have the complete opposite take from economist Nouriel Roubini. He argues that crypto offers zero protection. In fact, he thinks it's a speculative bubble that's just making the whole market more fragile and is actually speeding up the collapse. You just can't get two more different viewpoints. So where does this all leave us? Well, this tug of war can't go on forever, and it turns out there are three very specific events on the horizon that could finally decide which side wins.
All right, here's what to keep your eyes on. First, that White House legislation. If the US government actually becomes a Bitcoin buyer, that could create that ultimate price floor we talked about. Second, the SEC's decision on those Trump media ETFs. An approval would be a massive signal of political acceptance. And finally, the economic data itself. The next few reports will be the ultimate test. Is that recession canary theory for real?
And all of this brings us to the final, critical question for anyone watching this space. As all these giant institutions wade in, what's the bigger risk? Is it the fear of being left behind and missing out on the next big thing? Or is it the fear of getting caught in a catastrophic crash? The next few months are probably going to give us the answer.